Hey, so last panel discussion for the day. Glad to see that there are still people around for the discussion. And I could see some people looking at their watches. I presume that some of you have flights to catch. And for Mumbaikers, the more pressing problem, the BKC traffic. And don't worry, anyways, you're stuck here. It's 4:30 already. But we promised to make, it worth your time. So we had a very insightful day today. A range of experts speaking about various topics from across the renewable energy ecosystem. We heard about the remarkable progress that we have made in terms of capacity additions, the strengthening policy as well as investment landscape, as well as the overall positive direction in which we are headed. But it might be the right time to pause and focus on a very pertinent question, and that is, in addition to making renewable energy abundant, how do we make it readily available 24/7 across sectors, across geographies, across seasons? And when we ask that question, obviously the first thoughts that come to our mind are topics like grid modernization, flexibility, energy storage solutions, and of course the capital flow that will sustainably scale all of this. So we have with us a wonderful panel over here. We have founders operating in the space, we have an investor, and we have a policy expert. And who better than this really diverse and excellent panel to talk about the topic at hand. But before we get started, I would request the panelists to just give a quick introduction about yourselves.
Hello. Yeah. I'll start. Hi, this is Anshul. I'm a co-founder of a green hydrogen platform called Hygenco.
Hi, my name is Ayush. I'm the CEO and co-founder of AmpereHour Energy. We're a systems integrator for energy storage systems.
Hi everyone, I'm Neha Saraf. I am part of Morgan Stanley's infrastructure fund. This is an India-dedicated fund investing in sunrise infrastructure opportunities in India.
Good evening everyone, my name is Ashmita. I am the India consultant for the IEA. I predominantly function as a policy analyst in the space of energy policy for India. Yeah.
Thank you so much. And my name is Hari. I lead investments at Greenstone Capital, which is an environment-focused growth capital fund. Now, with this, let's start with the big picture around storage solutions. Now, India has made some encouraging strides in the energy storage space. There are lots of big tenders underway. There's a lot of talk about it. But then there's still a significant, ground to cover. So let me start with you, Ayush, first, right? And given that you operate in this space, what do you think is the biggest bottleneck, for storage right now? Is it technology readiness? Is it, storage stack design? Is it access to capital, or is it something else entirely?
So I think storage. So we as a company have been around for around 8 years. And I think the last one and a half years have been the inflection point in our business. Largely because of battery prices falling, and you've hit a point where battery prices are commercially viable for a wide variety of applications along the power value chain, beginning with very large scale, utility scale solar wind farms. You're beginning to see business models that are financially viable. That has led to like this exponential jump in the number of tenders that are getting floated, the amount of interest that there is in the space. And to a company like us, it feels like we're always playing catch up over here. We are kind of hitting a point where I think some of the parts of this entire application is getting a little too hot, like the new tariffs that are getting discovered. While it's great from a systems perspective because you're getting amazing tariffs, some of them are maybe not entirely financially viable. So you have to be careful with balancing viability. At the same time, you have to be careful with building systems long term. So I think that's a balance we kind of like need to pay attention to as we go along. But to me, right now, that is the focus that I think requires a little bit of attention. Otherwise, things are scaling up rather well. I wouldn't complain.
Great. Now that's a very, very optimistic and a very good perspective to have, especially from a practitioner in the space. Ashmita, let me come to you next. You obviously come from a global vantage point, right? So, basis your experience, how do you see, how have you seen the energy storage market globally evolve, especially in markets which are adjacent to India? Are there any examples of policies or business models or similar points which we could possibly draw inspiration from?
Thank you. So when it comes to battery storage, we at the IEA, we focus on a lot on energy security. Now, battery storage and for that matter grids as well, in our view, run parallel in relevance. To that, our numbers suggest that obviously battery storage for the power sector has been the fastest growing climate tech, energy tech that has been out there, growing almost year on year, doubling almost year on year for that matter. So that's a very unprecedented good growth. But last year in 2024, battery storage for power sector investments reached $66 billion for that matter. So, but on the same side, the risk is that it's still not at par with the levels of RE. The risk here is that while we might reach RE capacity goals of tripling RE capacity goals of the COP28, in order to make sure that it is energy secure, battery storage will have to increase almost 6 to 7 folds. For context, that is an average 25% increase year on year till 2030. So that's the kind of gap that we're dealing with. So, and add to that the concentration of supply chain and raw materials of China. So some of the things that we've seen other countries do, I'll focus on only two, obviously there are much more, is one, have a very robust critical minerals framework and long-term plan to address the gaps that are there. For example, of course, China has a stronghold on critical minerals as well. 85% of the battery cell manufacturing, on more than half of the refining capacity for lithium ion and cobalt. So you need to have a strong framework plan in place for critical minerals, and like shout out to the Ministry of Mines for the recently launched critical minerals mission, which has very appropriately identified the gaps that are, so critical minerals have regional differences and regional contexts. Identifying that and sort of hitting the nail on that. And second thing that I would mention is to sort of, again, these problems are regional specific and have their different regions have different capacities. So having cross investment opportunities between producer and consumer countries can sort of make the supply chain a bit more resilient and sort of support each other in the process.
Thank you so much. Coming back to India, Neha and Anshul, and then I would love to hear your views on it. One from from a practitioner, and one from an investor. Right. So when you look at a technology perspective, what storage stacks make the most sense for India's grid from a short to a medium to a long-term perspective? Obviously, you have lithium-ion stacks right now, globally as well as in India. But is that the most realistic bet, or do you see it going further beyond that?
So I'll probably have a very high-level view here as an investor, and maybe Anshul can give an operator's view at a more micro level. But our demand for power, India is already the third largest power market, growing at anywhere between 6 to 8%. And what we expect is that we will actually have upside surprises on the power demand. The demand is expected to increase. In fact, if you speak to some research analysts, what we hear is they're not even able to confidently model the power demand for India, given the growth in manufacturing and in future as data centers grow, etc. So the need to invest in storage is here and now. So what are sort of the most advanced technologies we have? We have battery storage on one hand, and we have pumped hydro storage on the other. I think if one were to compare, there are pluses, pros and cons for both these technologies. Pumped hydro provides you a larger or longer asset life, a better discharging time window versus battery. And on the other hand, batteries are more modular, they are not geography specific, you don't have to invest in, or you can basically deploy them anywhere in a very flexible manner. But at the same time, batteries, as was mentioned by Ashmita, we are still quite dependent on China, and we need to develop that ecosystem in India. So till that happens, I think we will rely both on pumped hydro as well as battery for our storage requirements. I don't think we can afford to ignore either.
Fair enough. And Anshul, would love to hear your views also on the same.
Yeah, from operator's point of view, I tend to look at from growth based on how the markets will evolve. So we started with a lot of battery deployment as the prices started to fall, more on the lithium-ion side or the LFP side of chemistries. And we started to see this hybrid kind of tenders, RTC and the pseudo RTC and FDRE kind of tenders. As it fell further, we went into phase 2 where we started to see standalone battery tenders. Like the question is, what is going to go ahead? What's the road ahead? So as the battery prices are falling, in our opinion, they are already close to that inflection point, or sometimes they have even passed that inflection point where people wonder, why do I use pumped hydro anymore? Because the unit economics of battery beyond a certain capex, crosses the cost advantages or any other advantage of pumped hydro. So the question of pumped hydro comes into the place because it's difficult to develop. It has a much more gestation cycle, environmental clearance, and so forth. Whereas batteries are modular, you can just deploy them anywhere, right? So I think we are already very close to that battery, to that point where the narrative has already started to shift. Hey, why do I develop pumped hydro? Which pumped hydros are still meritable? Yeah. Should I develop all of them? Now going forward, in my view, I think we have got these standalone battery tenders, and I think now the market, in our opinion, will start shifting to more towards two things: A, ancillary services, and B, basically, let's say, more flexible electricity markets. Okay. So one of the major advantages of these battery energy technologies, and I think Ayush will know that, they have these grid forming inverters, which basically, can easily provide ancillary services. And we didn't have proper mechanism in India to compensate, or economic models in the Indian grid to compensate for these ancillary services. As the Indian power market grows and as the renewable integration grows, the value of ancillary services being provided by these grid forming inverters behind the batteries just grows, in my opinion, exponentially, and that will become a major new growth opportunity in the battery energy storage systems. Going ahead from there, this was a medium-term view, long-term view, we have opening up of the electricity markets in terms of now the derivatives being allowed by the regulators. This, my opinion, would be the real game changer in the battery energy deployment system. Because once you have the futures and options, being traded, and, hedge funds love less liquidity because they like to make more money in less liquidity. So having hybrid systems of large-scale battery or different kind of chemistries being deployed on the ground, like the hardware stack plus the digital stack of trading the power in terms of basically futures and hedging them out with the actual energy storage in the batteries, that will become an enormous big business model, I would say, from 28, 29 onwards. And that would basically see a drastic, let's say, disruption in the classical business model of how battery energy storage has been deployed till now. Because the market itself is opening up to now new possibilities with features and options that can be played with battery energy storages. Now this will require you to have not only one single type of battery, like one single chemistry. It will require companies who play this game to basically operate 2 to 3 different kind of chemistries or 2 to 3 different kind of technologies. For example, 0.5C batteries for energy storage, whereas let's say sodium ion for very high, basically
Flow batteries, etc.
Yeah, very high power applications. So I think we're going to see a tremendous shift, and it will not just come from time shifting the power, it will come from ancillary applications, and it will come from opening up of the power markets in terms of the derivatives.
That's an interesting view. But what about, and I just like to take an extra minute on this, you mentioned different chemistries, so I presume sodium ion, sulfur, your flow batteries, etc. would be at some point in time, even though they're niche technologies right now, may or may not become mainstream. But what about other technologies, let's say compressed air or gravitational storage or any of these other technologies? Do you ever see any of these thoughts becoming mainstream at any point of time?
Yeah, definitely. I mean, we are a green hydrogen platform, and in green hydrogen we compress air, we compress nitrogen, and a lot of that stuff. In some of our plants, we have compressed air storage.
Sure.
So we are actually already doing it. It's not we are seeing it in future. Some of it we are already doing it today. So that is also becoming mainstream. However, I would say in terms for that's like medium term storage, not short term storage.
Sure.
For medium term storage to become competitive, it will have to be in that phase 2 where I'm talking about, where the energy markets are opened up in terms of futures and options. And if you have 3 month futures or 2 month futures being traded and you want to hedge those futures, I think at that point of time the medium term storage really adds value.
Absolutely. Yeah.
So I think maybe around post 28, 29, we will also start seeing a very lucrative market of the medium term energy storage in India. Today it's not there because today we don't have that kind of opening of the energy market.
Understood. Yeah. No, that's a very interesting view. Thank you so much, Anshul. Thank you so much, Neha. Now maybe we can switch gears to the grid itself, maybe a more macro view. Ashmita, again, again, just drawing inspiration from the global vantage point that you're sitting on. Any regulatory or market structures globally, which, possibly we can draw inspiration from in terms of building a better grid of sorts? I know you had covered some part of it in your previous response, but, would love to hear more about that.
Yeah, when it comes to grid, it's actually very contrasting trends that we see. So obviously we know that solar prices are dropping excessively, but on the other hand, energy infrastructure costs and energy equipment costs are almost skyrocketing in the other way. That's mostly due to a supply lag. And, two of the major risks that we see, one specifically in the tropics, is obviously thermal cooling and the massive pressure that is going to be put on already strained transmission capacities. The second is the rise of data centers, obviously. In our analysis, we have found that most data centers are congregating in nearby urban areas which are already stressed grids. We see that of all the projects announced till 2030 of data centers, 20% of them risk of not having enough power because of the grid's limitations. Now, of course, one of the major issues here has been the ticketing process, the permitting process, which is lengthy and extremely bureaucratic. Several countries have come out and tried to address this. Specifically, if I want to speak about Japan and Korea, building seamless systems and single ticketing platforms for this permitting issue that there is. To increase predictability of the timelines, to have safeguards in place for the timelines if in case there are delays. And of course another issue that we've seen is that the price as well as the price has almost doubled in the last few years. So some getting in long-term agreements for investors and bringing a blended approach to finance, to sort of trying to keep the prices down as much as possible. Some of the major innovative financing tools that countries are looking at, and also I'll just end with one more of it, is that there needs to be a pipeline of talent for skilled workers, because to build capacities and to encourage more innovative solutions at a more nascent stages.
And and thank you so much for that, Ashmita. Just drawing on some of what you said and then coming back to India, Ayush and Anshul, because, because of your vantage point as operators, right? If you were to look at, let's say, 5 to 10 years down the line, how do you see the grid in India evolving? Now, obviously, there are talks of better connectivity, there's talks of better flexibility, delivering 24/7 renewables, right? How do you see that evolution happening? What do you think are the key risks that we will encounter during, through this path, and how do you think we can mitigate them? Anshul obviously spoke about the integration of the financial markets with the grid, but beyond that, in terms of core operations, etc., on the ground, how do you see that evolution happening? Would love to hear your views.
So, if I have a 10-year horizon, and you look at what's happening right now,
and unlimited capital, let's say.
And unlimited capital. Love that. If you look at like what's happening right now and the type of projects that are getting announced, and in addition to that, if you look at the the CEA's report in terms of their planning of percentage of solar or wind or hydro, thermal, I think the trend is quite clear. You're going to have a ton of solar and wind that is going to come up. I think it's the cheapest source of power on the grid that's getting added. That will continue. Today, if you're at 20% or renewables, I think that will increase to maybe 30% depending on how fast, of course, the demand grows and how fast we are able to deploy renewable energy. The challenge is really going to be how does the grid still stabilize itself at 30%, right? At 20%, you've already started seeing spreads in terms of the power markets, where on a regular basis, you are seeing power pricing fall to near like 1 rupee or even below on many days, and then you see this ramp up, hitting the cap at 10 rupees, and that's an artificial cap. Who knows like where it will end up if this was a free market. So you're already seeing that trend come up, and I think that's only going to increase as we go along. Storage is really the only answer. There are competing innovative technologies that will keep coming up, right? Whether that's on the demand flexibility side, maybe there's some play over there, newer battery technologies that might come up. But variable renewable energy and batteries, like as a hard asset, are just going to come up. How you incentivize and scale up the business models is a function of capital, policy, markets, all of that has to come together to be able to make the whole thing happen.
Thank you.
Yeah, I think we speak it of less, but if you compare India's grid to many other countries, you would say that India is a pretty advanced grid. I think we sometimes forget that what have we achieved in India.
Absolutely, yeah.
This one grid, one nation is a phenomenal job executed in last few years or last decade, I would say. And if you today see the grid, it is relatively very less congestion.
Yes.
You could produce at one place, you could consume at one place, and the entire grid works. Of course, with the increasing renewable energy, not just the variation in the prices, I think you are also seeing a lot of variation in the frequency now happening, especially during the summer months where solar energy is getting injected, or sometimes it's not stable. So I think, as Ayush mentioned, I think fundamentally the stability of the grid will lie in suitable incentivization for and the related policies for the battery energy storage systems to not only supply that energy but to also supply the power and the ancillary systems. And that is why I say, I think as the renewable energy has to scale up, there is only one thing that is going to protect everybody, which is the ancillary services capability of the battery energy storage systems. And sooner everybody realizes it, I think there will also, markets and governments, they will also fall into place. They will start incentivizing these kind of services heavily, and there will be enough money to be made on ancillary services as well. Because there is no other way to integrate a large amount of renewable energy into the grid.
And better inverters, switch gears, the whole, basically.
I think switch gears are all static devices. But fundamentally it is coming from basically grid forming inverters backed up by spinning reserves, which are basically batteries. And that is the fundamental key to basically stabilize the grid and accelerate the integration of renewables in India. I don't think there is any other way. The second way is, of course, I think what Indian government has achieved through a method of operations of grid through SLDCs and RLDCs through NLDCs. I think it is already a phenomenally well done job in terms of how the data gets integrated till the top and then gets, it gets distributed to SLDC level. I think, but still there is a long way to go in terms of digitization and collection of data through automated systems, automated weather forecasting systems installed, which I think very recently there has been a notification requiring renewable energy players to install automatic weather stations, etc. So I think a lot of digitization will help. Coupled with that, I think the spinning reserve capability of battery, I think there is no other savior.
Great, thank you so much. And obviously to put into reality, and obviously for this evolution to happen, whatever Anshul and Ayush spoke about, obviously you need access to capital. So going to Neha, who has the capital, Neha, it would be great to get your view on what kind of grid storage opportunities, at a broad level, what are some of the interesting opportunities you're seeing in the space? What are some of the must-haves that you need on the table for you, or rather any investor similar to you, to invest in? And given the scale of the opportunity, obviously the opportunity is tremendous. There is significant scope for both operators as well as investors to participate in this story. How do you see the capital stack shaping up? Where do you see the capital flowing in from, across asset classes, across investor types, etc.?
See, to represent the investing community, because we have a certain focus, if one were to look at renewables, and within renewables, this whole concept of 24/7 power and more firm power, there are essentially three segments to it, and all three have to be solved for. One is the segment of project development, which has been invested into quite heavily in the past. The second is the segment, as we heard earlier as well from Prateek, is the segment of manufacturing. And we are at varying stages of development when it comes to the supply chain that feeds into the renewable power. So in solar, we are a little ahead versus, say, battery is still emerging that ecosystem. But from a capital perspective, this segment is attracting capital. In fact, one of the best returns in solar sector has been from the manufacturing space itself. And the third segment is the segment of services. As Anshul pointed out, there is a need for forecasting, there is a need for asset management, O&M, and other ancillary services which emerge for managing these projects at the scale at which we are operating. So I think and alluding again to what all we've heard so far during the day, renewable energy has been one of the largest attractors of capital in the infrastructure space. It's only, I think, the few nuances which are now changing in terms of investment, and investors are looking at sort of more complex power contracts, more firm power, but it all lies on that spectrum of risk to return. So for what level of return am I willing to take the kind of risk to back these projects? So we look at predominantly from the project's perspective and services element, not as much as manufacturing. And some of the must-haves which we seek is one, obviously the founder capability. And the good thing in this sector is that there is availability of talent. Because of the fact that this industry has been around for some time, there have been very good exits. There is very high quality caliber available for solving the problem of 24/7 power. So talent is there, so quality of the management is very important. The second element would be how are we solving for some of the bottlenecks which one will face as we execute on these projects. The bottlenecks include how are you securing a supply chain. So if you are into BESS or standalone BESS, then what sort of contracts do you have for procuring your batteries? Who are your vendors? What sort of contracts have you entered? And from a larger project development, how, if you are into FDRE or if you're into hybrid power, what sort of relationships you have for land acquisition, for getting connectivity. So right now, in addition to grid modernization, the biggest roadblock, as we are all aware, is there is no connectivity available, especially if you need to supply interstate power. So what kind of connectivity approvals do you have in place? So we are in a mature industry, relatively. This is probably, again, one of the more, after BFSI and maybe healthcare, this is one of the most heavily invested industries. So one has to eke out returns by looking at these finer nuances.
Understood, and appreciate that. Great. Those are my questions for the panelists over here. I would now throw open the questions to the audience. Yes, I can see a gentleman over there. Can someone please pass on a mic to him?
Congratulations to all the panelists. I really enjoyed everybody's insights. My question is to Neha. Neha, you made a comment that you broke it up into project development, manufacturing, O&M, and then you said that best returns have been from manufacturing. Now that was really interesting. Could you dwell a bit more? Could you tell us about some, 2 or 3 case studies? That will really help because, everybody's been talking about the developers, 25-year contract, the certainty of the contracts, and you are the first one I met in this whole conference who said manufacturing is best returns. So if you could dwell a bit more, give us 1 or 2 examples. Don't give me any secrets, but public information.
Yeah, and I'll also caveat that we haven't invested as much in manufacturing, so I'm not talking from my personal experience, and I was also talking more anecdotally as number of exits, probably say project development has seen a lot more. But if you see, like I was probably just referring to the Premier Energies IPO, in terms of the Premier Energies IPO, that IPO generated for the investors. So that was, I think, just an anecdote I was sharing. So that I was only referring to the fact that there is a lot to be done there and there is investor interest, since Hari referred or alluded to the question on how is the capital stack shaping. So there is enough investor interest in all these segments of the value chain.
What kind of energy storage investment opportunities are available in the market? Can you, Ayush, this question for you as of now.
I mean, that's a fairly broad question, and so if you look at the developers of energy storage assets, you have standalone developers who are playing at the transmission or the distribution segment. So you have battery as a service kind of contracts, leasing contracts that are taking place. So that's one place. You have renewable energy players, so solar, wind developers who are putting up storage assets. And then even within that, you have two types of developers. One which are more large scale and bidding into contracts with state or state utilities. Some who are selling it to CNI players. Then if you go into the value chain, you have system integrators like us who are working with the developers, building out solutions. Slowly you do have some players coming into battery manufacturing as well, like putting in some capital into building out the supply chain for battery packing, for example. That started. Cell manufacturing still remains a couple of years out in my opinion, because it requires a fair bit of capital and there's very limited number of players that have so far shown interest to put in that kind of capital. And then there's a ton of like services companies around which are doing O&M, providing software products. Very often somebody like us would be doing the software and the integration together. That remains our IP. So that's how the value stack is right now shaped.
Someone, anyone?
Yeah, I think Anshul touched upon the grid modernization plan as well.
So, yeah, I think when you're talking about grid modernization, I think this space, say, has not fully played out yet. The grid modernization, requires inherent resilience and a very strong planning in the grid. A very strong planning in the grid is coming from digital transformation of the grid and adding additional data acquisition systems and sensors, etc. And the resilience is basically coming from increasing demand for ancillary services. So I would say that today where the battery energy market kind of started, it started with, with certain CNI applications in factories, etc., manufacturers. Then it started with, this FDR and pseudo RTC kind of tenders. Then it went into standalone battery as a service deployment kind of tenders. And I think we are now heading perhaps towards a scenario in next couple of years where, there will also be sufficient compensation and profit pool for ancillary services. And the grid has started to realize the adverse impact only in, like say, very recent years, when just in last couple of years when the solar and wind has grown so much. Now in certain months or in certain dips. So I think typically it happens in the Badhala solar park. If a major, let's say, cloud cover comes, the entire frequency of the grid changes. And this is a data that everybody can check. From 50 hertz, it will just shift by 0.2, 0.3 hertz up and down, just because of one solar park in Badhala. And, it may be anecdotal, but there are these kind of instances that have already started to happen, which is basically challenging the resilience of the grid. Now, the good part is that our policymakers and our regulators are already actively working on this. And that is why I believe there has to be a solution to this. Otherwise, further integration of renewables will cause more and more challenges to the resilience of grid. And next couple of years, you should see, in my opinion, a very good profit pool for ancillary services also to be played out. If you find opportunity or a company that is already preparing for it, I would say, worth looking at it at this point of time.
Connected to the grid also without the battery running.
I mean, you can connect battery and solar together or battery or solar independently.
Is it
So what my understanding is, you correct me if I'm wrong, is government has made it mandatory that 10% of the capacity of solar has to be battery to get the stability in the grid.
That is for solar parks. Solar generation.
If you also look at the kind of contracts which are now coming out for PPAs. There has been a shift from just plain vanilla solar and wind to more firm power or more predictable power. So and that's a range in terms of the kind of contracts. You can go from hybrid to solar plus BESS to FDRE.
Or RTC.
Or round the clock. But as you go up in terms of the requirements for more 24/7 power, you would have to install batteries and use batteries as part of your project. Yeah, so it's fixed dispatch renewable energy where the generator has to provide in a certain time period of the day. They have to ensure at least 95% plus availability of the renewable power. So the time slot is defined, and in that time slot, the generator has to offer with 95% certainty the power, which in case of renewables typically is difficult. But then with combination of wind as well as storage, one can achieve that.
Sorry, there's one more question over there.
Hello. Yeah, I had two questions actually. One was on the opportunity that you mentioned in the battery and energy storage system, especially for the CNI segment. Like if someone is starting out today, given that like the projects that are for government are much bigger, like 100 megawatt. If someone is starting out today, how should they kind of approach it? Maybe the founders can kind of share as to what could have been in the opportunity that you mentioned in the CNI space, like in manufacturing or in the EPC space or as an IPP. Or the second one was more on the cell chemistry, battery chemistry side, where sodium ion or any other technology which you are seeing apart from the lithium ion is picking up.
Sorry, if it's going to merit a longer discussion, given the positive time, should we take it offline? If that works? I'm sure Anshul and Ayush are also available for a discussion post this. That's okay.